Hello and welcome to the Global Eye. I'm Shereen Bhan. The big international story that we're tracking today, just 24 hours ago, British Prime Minister Liz Truss said, and I quote, she's absolutely committed to the proposed tax cuts. But today, a U-turn. The British government has reversed its decision to cut the topmost tax rate from 45% to 40%. And this move comes after widespread backlash and market turmoil. The International Monetary Fund had warned that the tax cuts will in fact increase inequality. Arabelle Gumed gets us more.
Early this morning, we got word then that the UK Chancellor of the Exchequer, that being the Finance Minister, Kwasi Kwarteng, had decided to reverse his decision that he had set forth on September the 23rd, which was to cancel and abolish, as he had put it, that upper tax rate of 45%, which of course impacted the wealthy. Today, doing away with the abolishing of that top tax bracket and instead saying that it had become a distraction to what he believes was still a great growth plan for the UK economy. Markets have stabilized somewhat on the back of that. We saw the pound early this morning gain around 0.7%. That strength perhaps weakening off just a little bit. We even saw predictions on interest rates perhaps not set to hit that 6% mark and instead hit around 5.5 to 5.75. It doesn't take away, of course, that impact on the gilt market where the BOE, the Bank of England, has indeed intervened and said that they will throw around £5 billion per day to try and shore up that gilt market. So questions around stability still at the fore.
Arabelle, many thanks for joining us. Yes, the Bank of England was forced to intervene and now the UK government has done a U-turn on that tax cut. Now, shares of Swiss lender Credit Suisse plunged across global markets amidst rising concerns over its deteriorating financial health. The stock tanked even after the CEO reassured the clients and employees about their liquidity and financial position. The bank's credit default swap price has jumped to its highest level, rising to 239 basis points from 55 basis points at the start of the year. Leslie Picker is here with more. Leslie.
The rumor mill kicked off in earnest with a report about a week and a half ago saying the firm was sounding out investors about a capital raise. That news, although disputed by sources close to the firm, sent the stock to a record low, and it's fallen almost every day since, now significantly lower than $4 a share. The firm sent out a press release a week ago saying it's on track with asset sales and divestitures, which would help raise cash without diluting shareholders. On Friday, CEO Ulrich Korner sent out an internal memo obtained by CNBC where he tried to comfort employees and amid a slumping stock price and, quote, uncertainty and speculation. He said, quote, I trust that you are not confusing our day-to-day stock price performance with the strong capital base and liquidity position of the bank. So is Credit Suisse having its Lehman moment? Well, Credit Suisse's common equity Tier 1 ratio at the end of Q2 was 13.5%. That's higher than most U.S. banking peers. I'm told there's genuine interest in its securitized product unit, which could shore up some capital. However, the firm is sitting on hundreds of millions of dollars in losses from leveraged buyout-related debt that the market won't absorb amid this current risk-off sentiment. And it's impossible from the outside to get a minute-by-minute account of the true picture of risk on its balance sheets.
Leslie, many thanks for joining us. Credit Suisse under pressure. Joining us now to discuss these global stories is Jeff Chowdhry, partner, RLC Ventures. Jeff, always a pleasure. Many thanks for joining us. Let's start by talking about the big U-turn that's coming from the UK government. 24 hours ago, the Prime Minister saying that the government was absolutely committed to the tax cuts. And today, a U-turn with the Chancellor saying, well, we have heard you, we have listened, and we just need to do better. How is this going to go down with the markets? I mean, we saw the Bank of England being forced to intervene on the back of what the government had done. What now? What next?
Good afternoon, Shereen. Good to be back again talking to you. I think this move actually was absolutely inevitable. It was the wrong move for many, many reasons initially, politically, economically, and morally. So if you just take those in stages, from an economic perspective, reducing the top rate for high-rate taxpayers actually has very little economic effect. So it was wrong to do that in the first place. From a political perspective, if they had continued with this, it would have meant political suicide, essentially, for the new Prime Minister and probably her Chancellor as well. So she was probably going to be out of a job probably as quick as she came into the job. And that was not because of the UK electorate, it's because the Tory party, within the Tory party, there was a lot of unease. And then thirdly, morally, in an environment where we have recession, we have a terrible, terrible situation in terms of the economy, cutting the top rate tax for high earners is simply not the right thing to do. So this was really inevitable, this U-turn that we've seen today.
Absolutely inevitable, as you point out, and decadal high inflation, multi-decadal high inflation, that is also something that the government there is battling with. But in terms of what the takeaway is for the markets, Jeff, and we don't know what is going to follow now from the UK government, but we did see a little bit of relief across global markets when the news broke about this U-turn. But in the near term, what is this likely to mean?
Yeah, I mean, I think in the medium term, I think the short term, medium term, I think there's a lot of uncertainty. I mean, unfortunately for the UK's position is you have a number of global things which are going on, which are compounded by UK issues. So the global things are the ones that you're aware of. US interest rates obviously continue to go up. The war in Ukraine putting up energy prices. Those are sort of the global things which they can't get away with. On top of that, the UK economy is not in good shape at this point in time. And in particular, you've got monetary policy, essentially interest rates going in one direction, which is up. And you've got fiscal policy in terms of spending and tax cuts going in the opposite direction. And so this is not a good recipe for either market sentiment or a market appetite to take on risk. And so someone said to me the other day that this is probably the greatest divergence between economic fiscal policy and monetary policy for over 30 years. And that's the environment that we're living in. And that's not a great environment for markets.
No, it certainly doesn't seem like a great environment for the markets at this point in time. But Jeff, let's talk about the other big story and the speculation around Credit Suisse and what's going on there. We have seen that internal memo that the CEO has shared with employees and clients saying, look, don't judge us by our daily stock price movement. But there are concerns now on what this could mean. Is this a Lehman moment, and what will that mean in terms of possible contagion?
I think it's very difficult. I mean, the simple answer to your question, Shereen, is that nobody actually really know what's under the bonnet in terms of what's going on within the company, in terms of the potential losses or losses that they may have. I would say sort of two general things. First of all, whenever you get market dislocation, and we've seen this many, many times during market, there are always rumors about financial institutions, whether they're banks, whether insurance companies. Obviously, during 2008, we obviously had the big moment. So there's always these concerns. Secondly, and I'm sure this is the case, there are a number of financial institutions who are having issues, having problems, and they're just simply not publicized. And so it's a shame for Credit Suisse that they're the ones who are sort of in the spotlight, even though their capital position is in good shape, and even though the fact that the CEO has come out and reassured the markets. And also just to point out that obviously they are regulated by the Swiss authorities, which is one of the toughest in the world, and the UK authorities and the US authorities. That's not to say there can't be any issue, but I would just say that I'm sure Credit Suisse are not the only company or the only bank at this point in time who are under a bit of financial stress.
Yes, and we will have to wait to see the outcome of their meeting, the next date for a potential review and a growth strategy going forward. We're expecting some details to emerge on the 27th or around that time of October. Jeff, let me end by asking you what the prognosis is as far as the markets go in the near term. We've got all of these factors that we've already spoken about, but the big comfort that was coming in from the oil market with oil prices declining, we're now starting to see prices edge higher. We've got that crucial OPEC meeting on a possible cut in production. What are you reading into the market movement at this point in time?
I think still very much one of caution. I think interest rates clearly haven't run their course, going up. Inflation still, I don't think, is discounted properly in terms of rising. I mean, one of the reasons why oil prices are coming down is that there is concern in the market that basically a recession will cut global oil demand, and as a result of that, prices have started to come down. So that's not actually a good recipe for the oil price to go down, the fact that there's less usage. So still very cautious at this point in time. Obviously, markets have corrected very significantly so far this year, but I think we're still in for a very rough 3 to 6 months.
A rough 3 to 6 months. A quick word on India, Jeff, before I let you go.
I don't think, unfortunately, India is immune to the global sentiment. I know, obviously, FIIs have steadily taken money out of the market, and if the market the global markets remain uncertain, I think that India will continue to go down with the other markets in line.
Jeff Chowdhry, always a pleasure. Appreciate you joining us here on The Global Eye. Appreciate your time. We will head into a break, but up next, we turn our focus to Brazil. Outgoing President Bolsonaro and former President Lula headed to a runoff. Lula tops the race tally but falls short of majority. A special discussion when we return. The polarizing Brazilian presidential battle between outgoing President Bolsonaro and former President Lula da Silva will head to a second round at the end of the month. This after the former president, who many pollsters predicted to garner 50% of the votes, fell short of expectations. And though he did emerge at the top of the table with 48.4% of the votes compared to Bolsonaro's 43.2%, the leftist veteran fell short of the 50% mark that is required to avoid the runoff. There were a total of 11 candidates, including Lula and Bolsonaro, in the presidential race. The result would come as relief of sorts for Bolsonaro, who led a highly polarizing and divisive campaign against Lula. That's not all. As if taking a cue from the former American President Donald Trump, Bolsonaro said that he will not demit office if the results were unfavorable to him. Bolsonaro, who's been criticized for his handling of the COVID pandemic, his support for gun culture, and his attempts to subvert democratic institutions, enjoys considerable support among the conservatives, the evangelical Christians, and the armed forces, big business and rural landholders. Joining us now is political science professor at the Getulio Vargas University in Sao Paulo, Professor Casaroes. Many thanks for joining us here on CNBC TV 18. It is not an outcome that the former president will like. It has fallen short of the expectations and certainly comes as relief for Bolsonaro.
Shereen, thanks for having me. Yeah, it was a very mixed result yesterday. I mean, Lula was expecting, and most of his supporters, of course, were expecting to win the elections in the first round, and of course the results were disappointing. I'd say that Bolsonaro was the main winner of the first round of elections, even though he fell 6 million votes behind Lula in the first round. If you look at the results of state assemblies, of Congress, and state governors, Bolsonaro's movement that we call Bolsonarismo in Brazil came out very strong and very energized. So that might be an important asset for Bolsonaro in this month-long period between the two rounds of elections. So Bolsonaro gets to the second round runoff with a little bit more leverage than Lula, I'd say, despite the votes that he's missing. I'd say that Bolsonaro is he has been able to turn the elections to his favor, at least for now.
Yes, it certainly seems to be that way if one goes by what the tally tells us at the end of the first round. But, you know, I've been reading reports capturing the mood across the Lula camp, and many, while disappointed, do believe that, look, we're just going to have to fight harder. We're going to have to put up an even more aggressive campaign to try and swing things around in round two. What do you make of that? And do you believe that, given the leverage, as you point out, the advantage that Bolsonaro now enjoys, it's going to be an even harder fight for Lula?
It most definitely will. Lula will have to be very assertive and very aggressive in his campaign. I think it's important for Lula to clearly show voters what kind of government he's willing to run. Lula relied most of his first round campaign on his strong popularity So he didn't do much to tell people about what his plans are, what his policies will be, and what his government will look like. So I think it's important now that Lula will signal voters that he's really willing to build a national unity government against Bolsonaro and, of course, in favor of Brazil. At the same time, I think that Bolsonaro will have, he comes out on a very strong momentum, mostly because Congress and state assemblies have been massively pro-Bolsonaro at this point. So his caucus, his party caucus on Congress came out stronger than expected. So I think that even if Lula wins the elections, and that's something that we have to look into, even if he wins the elections, it will be very hard for Lula to govern under such circumstances. He's going to face hostile governors and hostile Congress people, and that's probably going to make Lula weaker as a president, especially in this initial period after taking office.
Well, speaking of hostility, what do you make of Bolsonaro's threat, trying to pull Donald Trump, saying that even if the votes don't go in my favor, he's unlikely to demit office?
Well, that's by far the most complicated aspect of the 2022 elections. We've never seen anything like this in recent Brazilian history. And Bolsonaro has persistently reaffirmed that he's not going to accept the election's results if he loses the election. And yesterday's results sort of served Bolsonaro well because he's able to strengthen his narrative of electoral fraud and of fraudulent polls as well. I'd say that polling institutes were also defeated in yesterday's results because most of them were very inconsistent with what we saw from yesterday's election. So I think that Bolsonaro strengthens his voters' sentiment that we are facing a massive and a generalized electoral fraud. I'm pretty much convinced that this is not the case. Things are as expected in many different ways, and I don't think elections in Brazil are fraudulent whatsoever. There have been many international observers looking into the security and the validity of the results. So I think that Bolsonaro will probably stir his supporters to take on the streets in case he loses, and that's where violence comes in. We might see in Brazil a scenario that really resembles what we saw in the United States on January 6th, and with two main differences. The first one is Bolsonaro enjoys considerable support among the armed forces and security forces. And also, I'd say that Brazil's institutions are unfortunately not as strong as the American institutions to withstand such an attack on democracy as we are about to see in Brazil.
Well, we will have to wait to see what the results are of round two, and then, of course, that eventuality, if Bolsonaro does in fact decide to take his threat forward of not demitting office if the electoral result doesn't go in his favor. Professor Casaroes, thanks very much for joining us here on The Global. I appreciate your time and your opinion. Well, we will turn the spotlight now on the Russia-Ukraine war. Ukraine continues to reclaim more territories. President Zelensky declaring the eastern town of Lyman as fully cleared of Russian forces. Russia was using the city as a transport and logistics hub. Recapture of this town is a major blow for Russian President Putin following his annexation of the key Ukrainian regions. NATO Secretary General has said the victory demonstrates Ukraine's capability to ward off Russian troops and the impact of advanced Western weapons on the conflict. Our colleague Sanjay Suri is in Ukraine. He reports from the war-torn Kharkiv, where locals are picking up the pieces and remembering those who laid down their lives to defend their city.
This year behind is a memorial to those who've died fighting and to those still fighting for Ukraine, fighting bloody battles and very difficult battles. And beneath that memorial, all around it, the sandbags and the flowers between them say just about everything that needs to be said about Kharkiv today. This has become the iconic memorial around Ukraine today, a high pile of sandbags within a black shroud. It is a picture of soldiers fighting and dying. It is the emblem of Ukraine itself. Consider the human or inhuman environment in which these flowers grow. In Kharkiv and all around Ukraine really, it's the season of war, not flowers. Signs of destruction are all around. The UN has counted 5,996 civilian deaths till September the 25th, with 8,848 injured, but with an indication that the number of dead and injured could be much higher. The worst by far has been in Kharkiv, where these flowers are blooming. Not many people walk by these flowers anymore or stop to look at them. Most people who lived around them have left. No tourist steps by to set eyes on them. But quite obviously, a lot of Kharkiv's gardeners have not left, and they are no more immune to missiles than anyone else. And you see them all around those buildings that have been bombed. Maybe because that's where we are and that's where we are wandering. Or is it the gardener's answer to Putin? Or maybe even, if we can be allowed an excessively romantic thought, the flowers themselves are saying something.
A shrouded memorial with sandbags and flowers. That is the war memorial currently in Kharkiv, which is also home to the biggest trade market in Eastern Europe, which was bombed repeatedly during the war. Sanjay visited the market to take stock of the aftermath. Take a look.
Barabashivo market here has been the icon of Kharkiv's success. It began as a neighborhood market. The turning point came with the collapse of the Soviet Union. That's when it moved from traditional to modern trade to become the biggest wholesale trade market in Eastern Europe. Kharkiv's go at that Dubai and Singapore dream. This is what became of the dream when this market was bombed first on March the 18th of this year. About 20 hectares of the market was destroyed, a fifth of it. And as firefighters fought the blaze, it was bombed again. Scores were killed, including 21 firefighters. It was bombed yet again in July, just after everyone at the market thought the worst was over and had begun to rebuild in some way. And now, yet again, traders have returned to open shop in hope. Customers are few, but this is still the place to buy cheap, and people in Kharkiv have never needed more before to buy cheap. Some shops have reopened in the hope that people and buyers will be back, but many shops that survived the bombing remain shut. Sellers or buyers, most have left Kharkiv. The face of the new business often is little shops outside those closed shops. Bicycle sellers are hopeful. After the bombing of civilian convoys looking to leave or to get people out, here in Kharkiv and in Zaporizhia, the bicycle could be the best bet for a getaway. But the market is a long way yet from returning to business even as before. Most of the activity you see here is shopkeepers talking to shopkeepers. This market had an upward run from the 90s until the first blow came by way of the Donbas war in 2014. That was a blow to growth. But over the past years, the market had begun to look for new ways to reinvent itself. The market had begun to look for a second revival through retail and a place as a nodal center for shopping. The Russian invasion now has pushed those dreams into the past.
Sanjay Suri there reporting from inside Kharkiv. And with that, it is time for us to wrap up this edition of Global Eye. Do stay tuned. The news continues here on CNBC TV 18.